And good morning, good evening, good afternoon, traders and students all around the world. This is FXPassion broadcasting you live on YouTube. And this is Forex Trading Course 101. Remember everybody, trading is a learnable skill when we learn in the correct way, not if we learn, when we learn in the correct way. The MST, M stands for the market, S stands for strategy, and T stands for the trader. We need to learn in the correct way those three pillars, right? And we are trying to do this with all of these modules here. So if this is your first time, please go back on Dukascopy YouTube webinars, everybody, and start to learn from the lesson number 1, what is market structure. Okay, talking about traders, what do champion traders say? Champion traders always say, I am not going to live and die on a trade by trade basis. And of course, this is a quote from Mark Douglas. And my 50 cents: when the market scares you, don't be afraid to do the right thing. What are the right things to do? Enter one more time, follow the rules one more time, obey the indicator one more time, okay? Don't be wishy-washy, everybody. And remember, 90% of traders lose money in the Forex market worldwide. The webinars are not trading or investment advice. The webinars are for educational purposes only. And for homeworks or questions, you have my Gmail contact, my Skype contact, and you can follow me on TradingView if you want. And the nickname is The Real FXPassion, right? Why The Real? Because they're trying to copy me. You know, everybody online is FXPassion. Okay, everybody, so that being said, trading Japanese candlesticks, support, resistance, pivot points, and formation. The intro explains the inflow of... Hello, boss, how are you? The boss is back, everybody. The intro explains the inflow of views in the basic videos from 2019 and 2020. Thank you very much. Guys, try to catch up. Thank you, boss. Everybody, if you have a question for the boss, he's here. Okay. So, the most important question, everybody, is: do you have your charts? Did you build your charts? Did you build your charts, everybody? This is one thing that we are seeing among the students, right? Beginner students, intermediate students, beginner traders, you know, intermediate traders. A lot of you, everybody, you don't have your charts. You didn't build your charts yet. You didn't save your charts, right? This is extremely important, everybody. So we're going to delete this one, right? So we are going to talk about, this is AUD, USD. I need to have AUD CAD here. AUD CAD monthly chart. Okay. So when we open, everybody, our platform, okay, we need to have our charts. Oh, what I'm going to put on the chart? Whatever you like. You know, if you like pivot point, support, resistance, have those on the charts, right? If you don't like pivot point, support, resistance levels, then you don't need to have them on the charts. Anyway, everybody, you cannot trade and win, you know, if every single day that when you open your trading station, your chart is like this. Might be the 15-minute chart, the 1-hour chart. Hello, Tari, how are you? Tari, do you have your charts? Did you build your charts? Everybody? And Tari, we have the boss with us today. Do you have any questions for the boss? Well, as you continue the course from the pre-summer lesson, the new guys must be just watching. They don't have prior things done. Absolutely. Absolutely. Teacher Tari, do you have your charts? So what do we mean, everybody? We mean like you are going to open the JForex platform and you are going to choose, right? You are going to choose NZD-CAD, just an example. Let's wait for a few seconds. Yes, sir. Thank you very much. Just give it a second, everybody. So, NZD-CAD monthly chart. And don't compare your charts with mine, everybody, because I'm giving classes. Okay, but it's you should have the tools that you are using. Okay, whatever you are using, support, resistance. So from the modules, right, you could be using market structure, you could be using highs and lows, you could be using trends. We're in the beginner module. You could be using trends, trend lines, support, resistance, pivot points, and lastly, candlestick formations. So whatever you are using, you should have on your charts. What charts? We learned about the trading time frame and we learned about the confirmation time frame. So you should have your charts built on minimum 2 time frames on the same currency pair. Okay? If you are a day trader, intraday trader, then maybe you have your charts on the 5-minute charts, 15-minute charts, and cross-referencing them with the 1-hour chart, 2-hour chart, maybe 4-hour chart. If you are a swing trader, maybe you have your charts, you know, you are trading from the 2-hour chart, 1-hour chart, 4-hour chart, and you are cross-referencing them with a daily chart. If you are a long-term swing trader, right, I have a job, right, then I'm going to be home 6 p.m., 7 p.m., so maybe you are trading from the daily chart and you're going to cross-reference your daily chart with the monthly and the weekly. Anyway, you should have, everybody, 2 or 3 charts, 2 or 3 different time frames, okay, with the tools that you are using. Tari, 4 time frames on each currency built. Wow. Wow, congratulations to you, Tari. Congratulations. Okay? This is so important. Why? Because imagine, everybody, that we wake up, right? Or we got home and we are opening our trading station and we are seeing this chart. What is going to happen? We are going to lose time analyzing the chart first, right? We are going to lose time analyzing the charts and building, you know, the indicator slash tool base. And if we are losing time every single day, and some of you are doing this, right? If we are losing time building charts, drawing on the chart every single day, then how we are going to trade, or when we are going to have to trade? Oh, I'm going to analyze the chart one more time. Well, the monthly chart is not moving, believe me. The weekly chart too is not moving at all. The daily, you know, maybe Friday is going to be something different, talking about patterns. See, everybody, this is a psychological excuse. Okay, it's normal. Welcome to the club. It's normal because we are dealing with uncertainty. We are trading, we are doing the job. Okay, we are performing the trading skill in an environment of uncertainty. And our brain says, okay, let's analyze again. Let's do it one more time. But Tari knows, right? Doesn't work this way. Build your charts. Build your charts, everybody. Build your charts, have your charts saved. NZD-CAD, just an example. I'm going to change, you know, euro dollar, open. You are going to see, everybody, the same indicators. Okay, see? I'm going to delete this one. right? 4-hour chart. What is this? GBP JPY. See everybody, I have my indicators on the chart, and one more, then we're going to start the class. What? GBP JPY. So build your charts, everybody. Have your charts saved. Okay. Now the lesson today is trading Japanese candlestick support, resistance, pivot points, and formations. Everybody tell me a currency pair where you are in a trade. Tell me a currency pair and tell me a time frame and tell me long or short. Okay? As an example, type in the chat GBP JPY 4-hour chart long, or NZD CAD 1-hour chart short, or USD CHF 15-minute chart short, or whatever might be the case. Okay, and some of you are in some trades, right? So type in the chat a currency pair and a time frame that you are in a trade. So we're going to translate this lesson into practice. Make sense? Yes, we are going to translate. So it's not going to be a theoretical lesson. We are going to practice, practice, practice. Remember, I have a 20 seconds delay on the chat. And first comes, first is served. Teacher Tari, are you in some trades? Are you in any trade? So where is the chart? There you go. This is the chart. Those are indicators, right? J4X, one of the best charting platform, if you ask me. This is GBP JPY 4-hour time frame and GBP JPY daily chart. Anybody in any trades? Okay, so let's talk about GBP JPY in the meantime, everybody. Monthly chart. Okay, monthly chart. Let's delete the indicators. Monthly chart in here. Now, don't get scared. All the blue lines, okay, are pivot point, support, resistance levels. Okay, don't get scared. And remember, candlestick formations. So this is the lesson today. Okay, this is the lesson today. This is the concept. Concept for today. I want you to learn this, everybody. This concept. Concept. CF stands for candlestick formation. Candlestick formations near monthly slash weekly. Okay. Pivot points, support and resistance levels are reversal points. Let's check my English if we understand it's a concept. Candlestick formations. Okay, I need to improve my English. Candlestick formations that appear near monthly and weekly. No, not daily. Daily not. Candlestick formation that appear near monthly, weekly, pivot point, support and resistance levels. Okay. Become tradable patterns like reversal points. This means that when this happens, we could, why could? Because we don't have the crystal ball, we could have a trend continuation, trend slash market wave continuation, or trend slash market wave reversal. Wow, right? This is something valuable for a beginner trader to learn, right? Wow, I mean, this is wow, right? This knowledge, everybody, in the old times, we used to say, oh, this is worth gold, right? Today, 2021, this is worth bitcoins, you know. So candlestick formations that appear near monthly and weekly pivot points, support and resistance levels become, if you see some grammar mistake, please help me, okay, become tradable patterns like reversal points. This means that when this happens, it's not if this happens, but when this happens, we could have a trend or market wave continuation or trend market wave reversal. Why is this important? Because if we have a trend market wave reversal, better to pocket your profits, everybody, right? And find another opportunity. Remember what this concept solves. Okay, this concept, challenge. What this concept solves? Challenge. Beginner traders used to give back to the market most of the profits. Intermediate traders too, time to time. So this concept, everybody, with the Japanese candlesticks near support resistance pivot points, solve this challenge. Beginner traders used to give back to the market most of the profits. So I have a winner, you know, I'm winning, and then I'm losing. Okay? Let's open a new chart, right? GBP JPY monthly chart, just an example, okay? And as you can see, everybody, remember, as the boss said, right? As the boss said, some of you are new here. If this is your first time, please go back to the Dukascopy YouTube webinar page and start to watch lesson number 1, what is market structure, and start to learn. Okay, some of you are new to this show. Okay, so we learned from the previous lessons that support, resistance, pivot points are not lines to the pip. Okay, it's not a line that it's at 156.168. It's an area. It's an area. See, it's an area. Okay, it's not a line, and so it's an area. Okay, and with this concept, you know, this means that when this happens, we could have a trend line, trend or market wave continuation, or trend market wave reversal. So we have a pivot point in here, agreed? And we learned about pivot points, so this is the market hit the pivot point reversed, the market hit the pivot point reversed, right? The market hit the pivot point, this is a high, reversed in here. So now it's not only, let me see if this is just resistance. Okay, so high, do we have a low? High. Okay, so this is not a pivot point, everybody, it's a level of resistance, right? Okay, so we have a level of resistance here, and if I have my charts built, right, I have my charts built. Now please hear me out, okay? I have my charts and I don't see the future. Okay, we don't see the future, we have just the monthly band. This is the lower band, right? So, and this is the monthly chart. Okay, I'm going to clone the chart and I'm going to go on the, not yet. So I'm going to draw a vertical line so we can understand that we are going to see the same exact time. Okay, so I'm going to clone the chart right now. Not this one, not this one, bye bye. So vertical line one more time. Okay, now I'm going to clone this chart and I'm going to go on the 1 hour chart, and I'm going to find this same vertical line. 1 hour. Let's compress the chart. Okay, so this is my chart right now and I don't see the future. Okay, everybody, do we understand what we are looking at? Back in time, this was the chart, this was the monthly chart, and back in time this was the 1 hour chart. Okay, hello MHB, how are you? Okay, so we don't see the future, right? But we are looking at the same exact time. Now I'm going to increase the 1 hour chart. Okay, and we learned about trend lines, right? And lower lows, lower highs, lower lows. So the market is in here. And I'm going to, so do we agree, everybody, that the market was making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs until here, and then it stopped making lower lows, lower highs, and it produced this low and it's a higher low. Do we agree on this, everybody? GBP JPY 1 hour chart. So we have, you know, we are starting to think about, well, maybe it's time to go long, right? Because the market broke the trend line and it seems like, to a beginner trader, it seems that the market is not falling anymore. Agreed? And maybe I have confidence and I'm going to enter right now. Maybe I don't have confidence yet. I'm going to wait a little bit, and when this happens now, I can see that the market is not making lower lows, lower highs anymore, but start to make higher highs, higher lows. Do we agree, everybody, that this could be a way of how we think as beginner traders? Just maybe, right? Just maybe this is how we think as beginner traders. The market starts to make higher highs, higher lows. Transparency, right? So in my brain, I'm seeing something like this, and it paused, and then it's starting something. So I'm seeing something like this, right? My brain understands the market that this is happening. So we had a downtrend, then we had some kind of consolidation in between, and then the market starts the uptrend. So this part here being the consolidation. Would you go long in here, everybody? Remember, what we are trying to learn is this one. Some of you are late. What we are trying to learn here today is the concept that candlestick formations that appear near monthly, weekly pivot point support and resistance levels become tradable patterns like reversal points. And I'm going to delete, because some of you is going to lock in the reversal point. So I'm going to delete this one. Okay. Candlestick formations that appear near monthly, weekly pivot point support resistance levels become tradable patterns. This means that when this happens, we could have a trend or market wave continuation, or we could have trend or market wave reversal. And this concept solves, not completely but partially, solves the challenge that beginner traders used to give back to the market most of the profits. Okay, this is what we are trying to learn. So would you go long in here, everybody? GBP JPY 1 hour chart. Yes, okay, so let's say that we are going long, right? We're going long, we're buying the market. We trade different patterns, right? We could trade the market wave, we can trade the short trend. So this is the market, going up and down, up and down. In the end, we are going long, right? We are going long. So as beginner traders, we are winning here, maybe we are losing one or two here, we are winning again, maybe losing one or two, then we are winning here again, right? So we are long. On the 1 hour chart, we are long, we are winning, losing, nobody's perfect, right? And we are losing, uptrend, downtrend, market wave. We are going long and moving forward. Long story short, right? Long story short, up in here we have a monthly resistance, right? We have a monthly resistance. So as a beginner trader, right, I could be making, one winner, clone, I want two, right? Just an example, I won 3 times, then I have a loser in here, it retraced too much, clone, then I have a winner again, so I have 3 winners, 1 loser, I won again, maybe I lost again in here again, deep retracement, I was not skilled, and I'm seeing this. So if I have my charts built, then, and I'm learning, and I know that candlestick formations that appear near monthly and weekly pivot points or support resistance levels become tradable patterns, and this means that when this happens, we could have a trend or market wave continuation or trend market wave reversal. I want you to learn, everybody, when you see something like this on the 1 hour chart, 2 hour chart, 4 hour chart, could be the 15-minute chart, then be very careful what you're going to do. Why is that? Remember, 156.168, it's not a line, it's an area, okay? And if I'm not aware that we have from the monthly chart, if I'm not aware from the monthly chart, this is the monthly chart, this is the monthly chart, and if I'm not aware that we have monthly resistance in here, and if I'm going to buy, what is going to happen? Oh, how do you know? Well, we don't know. We don't know for sure. This could be the weekly, right? Weekly too. This could be the weekly. Weekly resistance. But if you have your pivot point, support, resistance levels built in your charts, on the monthly charts and on the weekly charts, then we would escape, everybody, this one. Beginner traders used to give back to the market most of the profits. This is where we are not profitable yet, consistently profitable. This is where we are not living from the markets, meaning we don't make consistent money, right? So I'm trading well as a beginner trader, or maybe an advanced trader, or maybe in an intermediate trader. So I have winner, 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 loser, winner, loser. So talking about $100, you know, so I won 100. It's just an example, just for you to understand. Let's say that I'm winning, not to be too optimistic, right? Let's say that I'm winning $50 per trade. Okay, I want to buy bread and milk, so I won 50, you know, so here I won 50, I won 50, I won 50, and then I lost what? 30? Risk reward ratio, lost 25, right? Just to make it simple math. Lost $25, which is okay. Welcome to the club. Lost 25, and so my account, the account of my FX book, it's growing, right? It's like, yoo-hoo, I'm doing well, I'm a trader, right? And then we are here. There is a monthly, weekly pivot point, support, resistance level, you know, and I'm not aware, hear me out, I'm not aware. Why? Because some of you, and this was me back in time, I didn't have it on the chart. So just graphically, see what's happening? I enter a trade and I lost, just graphically. Lost again, right? And now, do we agree, everybody, that now maybe it's time to short the market? Do we agree that the market broke the trend line and maybe, you know, maybe it's time to go short? Somebody's saying yes, somebody's saying no. Okay. Nonetheless, look at my account. So, you know, I have 1, 2, 3, 4 winners and 3 losers, which is okay. But my account starts to do something like this. So I'm giving back. This was the profit. So I'm start giving back part of my money to the market. Agreed? And you are going to hear me say a lot of times, some losers are acceptable, some losing trades are acceptable, some losing trades are not acceptable. Beginner traders, what are the losing trades that are not acceptable anymore? If you lose near the monthly support, resistance, pivot points. Oh, why those are not acceptable? Because we learned today the concept. Candlestick formations that appear near the monthly, weekly pivot points, support and resistance levels become tradable patterns. This means that when this happens, we could have a trend continuation, market wave continuation, or we could have a trend reversal. What is happening here? Do we have a trend reversal? Maybe yes, maybe not, right? Either way, as a beginner trader, as an intermediate trader, okay, welcome to the club. This is all normal. It's all the process of growing up as a trader. But I need to get conscious and aware that I'm giving back, you know, a portion of my profits to the market. So I want to pay my bills, but I can't. How can I? You know? So eventual losers are acceptable. But so this is an acceptable loser, this is an acceptable loser, maybe this is an acceptable loser too, right? We don't have the crystal ball. The market was above the uptrend line. I went long, I lost. Welcome to the club. Okay, but what about now? Should I go short or should I go long? Right? And somebody says short. Okay, so we are shorting the market and we have a winner, right? We have a winner. Winning trade, this one. So we have a winning trade and then, whoop, what happened again? We have a winner and then back again, we have a loser. Talking about making money, making profits, where are we? If I compress the chart, where are we? In this sense of building the account, what is my FX book showing, right? So this is the money, right? Yellow line up in here, this is the money. So I'm still here. You know, I made money and I lost money, which is normal, right? So I'm still here. This is the challenge, everybody. Beginner traders, intermediate traders, okay? We make money in the uptrend and then we give it a big portion back. And beginner traders, intermediate traders, sometimes advanced traders, we make money in a downtrend, easy tradable, and then we give it back to the market, right? So losers are normal. Why? Because we don't have the crystal ball. We trade in an environment of uncertainty. But when we have monthly or weekly pivot point support resistance levels, you know, those starting from today, and if this is your first time with us, please go back to Dukascope YouTube webinar page and start to watch lesson number 1, what is market structure. So starting from today, these losers are not acceptable anymore. Okay? Now, this is the concept. If this happens, if you want to listen to me, you can accept what we are teaching you, you can reject what we are teaching you. Stop trading near monthly / weekly pivot points, support or resistance. Stop trading. It's just an example. I have a question on other streaming platform. Passion, when you say when this happens, what do you mean? Thank you very much. When this happens. When this happens. Okay? Up in here, so everybody, do we agree that starting from here up to here, more or less we could understand what's happening, right? I mean, it's an uptrend. Extension, retracement, extension, retracement, extension, retracement. Agreed? But what happens next? the market breaks the uptrend line and I'm short and I won, and then the market gets back in or breaks the lower lows, lower highs, and starts to make again higher highs, higher lows. Okay, so let's not confuse apples with bananas, everybody. What are the apples? What are the bananas? Stop trading when this happens where? Near the monthly or weekly pivot point support resistance. Why should I stop trading? We are in an uptrend. Because you are going to lose. How do you know? Because candlestick formations that appear near the monthly and weekly pivot point, support and resistance levels become tradable patterns. This means that when this happens, we could have a trend continuation or a trend reversal. This is why beginner traders, okay, what is the reason? We are not skilled enough. Nothing personal, you know, we are not judging anybody. I did this too, okay. So when this happens near the monthly pivot point or weekly pivot point support, stop trading. Why? Because, you know, tell me everybody, let's make a poll. How would you trade this? Long or short? Just graphically, you know, if you say, teacher MHB, teacher Tari, how are you going to trade this? And if you say long, I'm going to draw a quadrant. If you say short, I'm going to draw a circle. Just graphically, you know, not to have a conversation about, oh, the stop loss goes there and take profit goes there. I want to show everybody why near the monthly and weekly pivot points, you know, the risk increases. You know, why? Because we don't have, the, you know, we don't have the crystal ball. What does this mean? This means that I know what some of you are thinking, everybody. Some of you are thinking, you know, oh, it hit the resistance levels here, let's short the market. Not that easy. Oh, the market's going to reverse. How do you know? How do you know? Oh, I know because I know. Well, if you know, I'm going to give you $1 million and then you're going to trade for me, alright? But if you lose, you're going to give me back the money. If you know what is going to happen for sure up in here. Oh, but the market reversed here and here. Sure. But those are assumptions. Assumptions. Right? We don't know. And when we say we don't know, this represents risk to the trader. Tari, short on the next counter trendline break. Very good. Tari says short. Let's see what is going to happen. So just graphically, right? Let's zoom in. Come on. Let's zoom in. We don't have the crystal ball. Let's zoom in. So would this be an entry, Tari? We have a 70% downtrend. Sure. Would this be the entry? Thank you very much, Tari. Would this be your entry? Everybody, how are you going to trade this one? We made money shorting the market and then we lost money because the market went up. And Tari says, well, let's short the market. Is this okay? Remember everybody, I have a 20 seconds delay on the chat. Or maybe, you know, we have another, right? We have another uptrend line or counter trend line. So this one maybe, right? If you want to short the market. Okay? So what happens when we are shorting the market? Long story short, right? Long story short, we would lose. The market went up again. So the market went up, right? We have a loser. Okay, what do you want to do up from here, everybody? Long or short? Remember, what I'm telling you is stop trading. You know? And this is common behavior amongst beginner traders, intermediate traders, sometimes advanced trader. No, I will still wait to see the next. What is PB? So if you went short in here, you would lose, right? And to be fair, right, somebody says, okay, let's go long, so somebody would win. Well, okay, what about in here? Long or short? Let's say that you went long in here, you won. Okay, what about in here? I'm telling you stop trading. But no, right? I'm making money. Let's go long. Right? And I'm telling you, don't go long. Don't go long. You have a resistance here. You have a monthly resistance. Don't go long. And you are telling yourself, let's make money. Let's go long. Do you want to go long in here, everybody? And remember, if we don't have our charts built, we are going to go long. With reason, right? But if you have a monthly resistance here, and I'm telling you don't go long, and you are telling me yes, let's go long, I just won. You know, MHB says no trade now. Why not? We are making money, we are in an uptrend. It was a winner. So loser, winner, loser, winner. Right? So how is my account? After those two, you know, I am back again in the money, right? I'm making money here. My FX book or my account is here, right? So my brain says what? My brain sees, whoops, yoo-hoo, right? This is my account, it's growing, right? Let's make some money. And what we're going to do, most likely, especially if we don't have the money, if we don't have our charts, most likely we're going to buy again. And what is going to happen? We lost again. And then what is going to happen? We would short the market, right? Look in here. We would short the market. We would short the market in here. And the market would went sideways. And then the market, we would lose again. See everybody? See the quadrants and the circles? Do you understand now why using candlestick formations near support, resistance, pivot points is important? This is the money curve. This is me as a beginner trader. I want to pay my bills. And when I have an uptrend on the 1 hour chart, 2 hour chart, 15-minute chart, as a beginner trader, I'm making money. This is the money curve. With some winners and some losers, right? You have losers too. Winners, but this is my account. But then this is going to happen. The money curve is going to start reversing. So this is the challenge. This is why this profession in the beginning seems impossible. I'm never going to make enough money to pay my bills. So this is the money curve. I'm winning, I'm winning, I'm winning. I don't see the future, but we're in an uptrend. I have the occasional loser. The market reversed too much. And I have a winner. It's an uptrend. And then I have the occasional loser. You know, and then I have the loser when the market broke the uptrend line. So I won 1, 2, 3, 4, but I lost 3. I'm still in the money, but nonetheless, I gave back to the market portion of my profits. And then what happened? You know, I went long in here, or short. Maybe I won, maybe I lost. And I short the market in here and I lost again. So as you can see, winner, winner, winner. Look at this. Loser, winner, 0. Loser, winner, 0. Loser, loser. Winner, loser, loser, loser. Why is that happening? Clone chart. Those losers are not acceptable anymore. Those losers are not acceptable anymore. Okay, I need to clear the chart, clone, clear chart, save template, open, blah, blah, blah. Clone chart, okay, I need to do it manually. See everybody, why this is happening? And look at the candles, Japanese candlesticks, from the weekly, not from the 1 hour, from the weekly. And we don't see the future. And support, resistance, pivot points are areas. So, in conclusion for today, we won, beginner traders, intermediate traders, advanced traders, we won, you know, in here. And then we gave back to the market in here. Okay, now let's make a calculation. How many winners? 1, 2, 3, 4, 5, 6, right? Okay, 6 winners of 25 bucks, just an example, equals to, calculator, 6 times 25 equals to 150 bucks. Okay, you can rearrange those numbers, everybody, however you want. You know, you can make 25 bucks as an intraday trader, or you can make 250 bucks on a bigger account as an intraday trader, or you can be doing this on the daily chart as a long-term swing trader. It's always the same. You cannot escape this. Okay, and risk reward ratio wise, when we lose 25. So 1, 2, 3, 4, 5, 6, 7 until here, right? We have 7 losers. Text, 7 losers of 25 USD equals to, where is my mouse? So 25 times 7 equals to 175. Whoops. I'm sorry, I made a mistake. So it's not 25, it's 50, right? 50. Okay, so 6 times 50, 300. Okay, made a mistake in here. So we want 300 and we have 7 losers, edit label, 7 losers of $25, risk reward ratio, and this equals to, one more time, 25 times 7 equals to 175. 175. 175. 7 losers of $25 equals to 175. So, you know, this could be an intraday profit, this could be a monthly profit, this could be a yearly profit of a hedge fund. You need to understand this, everybody. If this lesson is too complicated, everybody please watch this lesson 2 or 3 times. Okay? So 300 minus 175, just an example of numbers. 125. 125. So text total equals $125. Okay, and somebody of course saying, oh, I would be happy with this, I can still go to buy some bread and water, right? Bread and milk. It depends where you live. Okay, but if you live in San Francisco, United States, you cannot pay your bills with $100. Not realistic. Okay, this could be your, what if this is your monthly outcome, right? And you live in UK, you live in Canada, you live in Europe, in euros, just change dollars to euros, you cannot pay your bills, you know, and somebody is complaining, oh, I cannot pay my bills with 300. It's just an example of the numbers. Focus. What is the lesson here? This is the lesson. Beginner traders, advanced traders too, used to give back to the market most of the profits. Or maybe I can change my English vocabulary, you know, not most of the profit, but better vocabulary. Big portion of the profits. Beginner trader used to give back to the market big portion of the profits. Intermediate traders too. Advanced traders sometimes still there. This is the lesson. So starting from today, everybody, if you don't have it yet, build your charts. Build your charts. Don't do this that every time that you're going to open your trading station you are going to have a blank chart. Don't do this. I'm telling you, you know, oh, I want to analyze one more time. Oh, let's analyze again. If you're going to analyze the market, you are not going to trade. So build your charts with what you understand, with what you like, with what makes sense to you, okay? And learn not to trade, or at least pay big attention when we have support, resistance, pivot points. And remember and learn this concept. Candlestick formations that appear near the monthly, weekly pivot point, support and resistance levels became tradable patterns. This means that when this happens, we could have a trend or market wave continuation, or, in this example today, trend market wave reversal. And when you are going, so today we have a resistance level up in here. It could be a support level when you short the market too. If you're on the 1 hour chart, 2 hour chart, 4 hour chart, 15-minute chart, and you are near a monthly or weekly pivot point, support, resistance, stop trading. And again, you can accept what we are teaching, you can reject, you know. You can say, oh, you know, I'm going to trade. Okay. But don't come back crying, you know, oh, passion, help me. How can I help you? You are not listening. Oh, but I made 2 winners near the pivot point. You are not hearing me. Of course, nobody's perfect, everybody, but those kinds of losers are not acceptable anymore. Tari says, great example to highlight the power of candlestick formation in your higher time frames, and thank you very much. Okay, everybody, see you back tomorrow. Until tomorrow, build your charts. Okay? Build your charts. Until tomorrow, stay strong and trade with passion. This is FXPassion signing off.